Day traders have it all wrong. They see the market run up, they sell it. It comes down, they buy it. It runs up, they sell it. It comes down, they buy it. It runs up, they sell it. And then, whoa, prices take off and they sell and they lose money all the way up, not realizing the only way you make money in the market is to catch a trend. It doesn't matter if you're a day trader or a long-term trader. Trend is the basis of all profits. You need a trend. Now, we also know this, if you study your charts, you'll see that all large range days, or almost all of them, close at their high or close at the low. So the most successful day trading strategy is to hold to the close. Don't try to dance in and out, because when you have a loss, you're going to have a big loss. Try to catch a trend move, hold to the close.
Most traders fail because they try to fight the market. They buy when the price is crashing and sell when it's skyrocketing. But what if you could read the market's mood like a book? Today, I'm going to show you exactly how to trade trending markets to catch massive moves, and how to spot a trend reversal before it happens so you don't get left holding the bag, whether you're a day trader or a long-term investor. These two skills are your bread and butter. Let's dive in. Section 2. Trading the trend. First, let's talk about the trend. You've heard the phrase, the trend is your friend, and it's true. In a trending market, price moves in a clear direction. To trade a trend successfully, look for three things. Structure. In an uptrend, look for higher highs and higher lows. In a downtrend, look for lower highs and lower lows. The 50-period EMA, use a moving average. If the price is above it and the line is sloping up, you are in a healthy uptrend. The entry, don't chase the peak. Wait for a pullback to a key support level or the moving average. This gives you a discount. Entry with a tight stop loss. Section 3. Spotting the reversal, but what happens when the party ends? Trading a reversal is about spotting when the big players are exhausted. Watch for these three reversal warning signs. Divergence. If the price makes a new high, but your RSI indicator makes a lower high, momentum is dying. Break of structure. This is the big one. If an uptrend fails to make a new higher high and instead breaks below the previous higher low, the trend is officially over. Candlestick clues. Look for long wick candles like shooting stars or hammer candles at key resistance levels. These are signs of a price rejection. Section 4. Risk management and conclusion. Remember, no strategy is 100% accurate. The 1% rule. Never risk more than 1% of your account on a single trade. Stop losses. Always place your stop loss just outside the recent structure. For a trend trade, place it below the last higher low. Trading isn't about being right every time. It's about winning big when you are right and losing small when you aren't. If you found this helpful, hit that subscribe button and let me know in the comments. Are you a trend follower or a reversal hunter? Let me know in the comment section.